Hi everyone, today let's talk about the Trump 2.0 economy. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Trump 2.0, we've talked about this a little bit. We had some economists come out and say that they could see a little bit more inflation coming into the markets if we get a Trump 2.0. Does seem likely that that's going to happen based on what we're seeing in the polling, especially after that most recent presidential debate. So let's talk about the economic impacts. We got proposed slapping of a 10% minimum tariff on all imports and a 60% tax on goods coming from China. So lots of tariffs, which could disrupt the global trade and drive up inflation. Pretty much the same thing as what we saw there previously. We also would see the tax cuts potentially coming back, which would give a boost to the economy, putting more money back in the pockets of Americans. I do like that as well. The question again is, does that come with a cut in spending? Potentially unlikely, which makes me like it significantly less. So trade could be stymied a little bit with those tariffs, as well as that big 60% tax on China, driving up inflation. And then they give a breakdown of how that would affect all of the different sectors, material and equipment getting the biggest cost increases, but we would see it across the entire market. Food, 90, oil and petroleum products, 120, autos and motorcycles, 220. So definitely not great in what we would see across markets. And the question is, what is he going to do with that 10% tariff? Could it potentially help the economy if the government takes that money? I think we could all make a good argument that it will not. The government doesn't do a great job when it comes to actually pushing the economy. They usually throw money at the problem, which could lead to a short-term jump, but not necessarily long-term growth. And that doesn't even mention the potential effects on our actual partners. So you have the European Union, which would also be taxed. They could potentially be upset about that, taking off about 0.4% of U.S. economic output, which again would not be good for markets. So you got lots of tariffs, which are not good for the economy. Then you have the disruption with China, also not great. But it is worth mentioning that we've also seen a global push away from China over the last 12 months. And you can see U.S. imports from Mexico have actually pushed above those imports from China. So big change there. Also good for the independence of America away from China. And then a deeper look at those taxes, you can see 2017 tax cuts would come at a cost of around $5 trillion if we did not decrease that spending, especially with the rise in interest rates that we've seen from his last presidency. So need to see that budget deficit come in. He spent a ton of money when he was in office. Obviously, we had COVID, so there were some justifications for that, but we absolutely cannot do that again, even if we have a similar situation. And then there's deregulation. That could be interesting. Would that give the economy a bit of a jump, and what would be the longer term effect? And they mention here inflation, interest rates, and the US dollar would all likely turn higher if Trump was elected again. Moving over to fear and greed here, you can see we've been steadily rising. We also got a slightly higher low there at 44 from the previous low at 39. So this is continuing to trend higher. Probably going to hit that 63 area just looking at this chart. And it's starting to look a bit like a cup and handle there. So looking like a rally, momentum, still extreme greed. Really no change on these indicators. Put call ratio very low at 0.67. And then looking at volatility, did see a step higher. That was interesting. We'll take a look at that again on the charts. We talked about it on the Friday video as well. And then safe haven demand and junk bond demand stepping into extreme greed with the big drop on interest rates that we saw on that unemployment data news on Friday. Moving over to the AAII survey, you can see really no change. Bulls did step down a little bit, neutral stepped up to 32, and the bears shrunk a little bit as well. So bulls and bears shrinking, neutral getting a little bit higher. Pretty interesting considering that markets were super bullish, starting to see that bull sentiment come down, potentially indicating we're starting to see a culmination of that bullish sentiment, with this survey coming down despite markets continuing their rally this week. Moving over to sentiment, looks like we're getting a regular year, continuing to trend higher seemingly every day. We are expected to see a little bit of a flat week here from the 8th to the 10th, and then a resumption of that rally into the end of the week. But if this were an election year, we should have been flat, which is not what we're seeing. So still going off of that regular year, which should be slightly flat to bullish going into the end of the week. Moving over to the calendar side, you can see consumer credit on the Monday, and then pretty much every day this week is expected to be bullish. 9th up 17, down 4, 10th up 16, down 5, and then the 11th as well, up 16, down 5. So bullish all week. We also have CPI and PPI on the 11th and 12th respectively. So we do have a decent amount of data, but bullish readings basically all week. Moving over to the earnings calendar. Yes, the earnings calendar seems like we were just finishing finishing earnings season. Now we are already getting back into earnings season. So the 11th, we got PepsiCo, Delta Airlines, Progressive. And then on Friday, we start with the banks, JP Morgan, Wells Fargo, Citigroup, to really get that kickoff of the earnings season. Moving over to the economic calendar, pretty much nothing here for Monday. 1-year consumer inflation expectations from the New York Fed. Then looking at Tuesday, 3-year note auction, Chair Powell testifying, that could be interesting. Wednesday, Chair Powell testifying again to Congress, and then you got the 10-year note auction, crude inventories, and then for the Thursday, this is the big one, obviously CPI data coming out. 30-year bond auction, fairly interesting, as well as initial jobless claims. Those have been continuing to rise, want to watch those. And then for the Friday, you have PPI and then the Michigan inflation data. So lots of inflation data, as well as Chair Powell speaking at Congress this week. Moving over to Max Pain, you can see it's at 545, so we are much lower than current price, but that has been the theme over the last 3 weeks, nothing crazy there. Put call ratio is still very high, so you're not expecting markets to dip low with a 4.37. Total options, 562,000, nothing crazy there either. Some decent call walls at 550 as well as 556, but price is already at the top of the puts, which is sitting around 551, 552. So market's a little bit extended based on this chart, but I wouldn't expect them to crater too far. First put wall there at 540, decent one here at 545, but again, not a ton of options in markets, so you could argue for a little bit of downside, but the put call ratio is still very high. Moving over to the charts here, starting off with the S&Ps on the weekly, you can see we had a clear breakout of this trend line, so everything looks super bullish. Momentum bullish, RSI bullish, still have a little bit of divergence. Peak RSI was 78.98, current RSI 76.34, so still have divergence from this previous peak, but everything still continues to look super bullish, especially with that breakout and the close on the high of the week. So based on this, you would expect everything is going to continue to go higher. And then looking down on the lower time frames here on the daily chart on the SPY, you can see that upper trend line here up around that 560 area. That would be your price target for this next couple of days, which still gives you plenty of room. That's about another 1% higher. Momentum still bullish, RSI still bullish. Don't have any levels here. Let's go ahead and add one. Added one here at 550.12, right at the peak high from that Thursday the 20th. Not adding any levels here yet on this next push, but we'll see how it plays. Right now, price target 560. Moving over to the Tasty charts, you can see that upper ATR is 557.82. We are within striking range of that. Expect to hit that this week. So again, that's about $3 to $4 higher from current price. You can see on this last push, we did overthrow it for a while before pulling back, giving almost all of that grinding price action back. We've talked about it a few times. So even if we overthrow it pretty decently up into the 560s, 570s, most likely we're going to give some of that back, fall back into the 540s, 550s before we get a continuation higher. Did see an ATR stop move higher again this week. That's at 515.70, so still bullish conditions on the weekly chart with just a little bit more potential price action to that upper ATR. And then looking at the daily chart as well, 555.98 is that upper ATR for the Friday session. Didn't quite touch it, so this will continue to trend higher. You can see all of these are continuing to swing to the upside. ATR stop is 537.70, so again, everything bullish. It is interesting to see momentum in bearish conditions here despite price action being very strong. This could really go either way, and it's kind of something to keep in the back of the mind. We can see it here, bearish momentum despite price action rallying, and then it rolled to the bull side and price action continued to rally. So volume weighted MACD can go either way. And right now it's not very strong to the bear side, so I wouldn't put a lot of faith in that, at least in the short term. Moving over to the NASDAQ here on the weekly chart, again, we are right in that upper ATR range. Upper trend range, you can see we overthrew this first one. Looking at the second one on this rally, everything still looks very bullish. Momentum bullish, RSI bullish. RSI to 74.96. That is typically where we start to top out. 74 here on that previous top, 74.63 there before we started to see consolidation and dips. And then this previous high in June, that was in the 72 to 75 range. So we're getting there. It's definitely extended. It's been an aggressive rally. You can see that trend resistance sitting there around 20,600 for this next coming week, which does give you about 200 more points to the upside, or about 1% higher. So still possible we see more rally even with the really strong rally that we saw this week at 3.6%. And moving over to the daily chart here on the Qs, you can see we did overthrow this trend line here. We've been above this a few times on this most recent rally for the past several months. Touched it here in May, did pull back down to that lower range. Similarly here in mid-June, pull back to the range. And it seems like we're going to do it one more time, head up to that upper zone. 508 would be where we would be looking for some resistance if we did get to that upper trend line again, which is still a lot of upside from here. It's certainly possible that we go another 2.5% to 3% higher over the coming week. If we hit that, obviously that would be very extended. We're already at a 75.94 here on the daily chart RSI, so definitely extended. You can see the previous peak here was 81.5, 81.59. So right in there, certainly could go another 5 or 6 points higher on the RSI, hit that upper range, and then you would expect at least a little bit of pullback. So see how it plays. Everything still looks super bullish. Moving over to the Tasty charts, similar thesis to the SPY, hit that upper ATR. That's at 492.76. So we're well above that by about 1%. Again, you can see it, can grind higher. Eventually it does come down back to earth. So we could see another grinding price action into that upper range that we saw on the trading view charts. Momentum continues to step to bullish. ATR stop at 443.42. And then looking at that daily chart, that is 492.06. So pretty much right in that same range as the weekly chart. Again, we are extended well above that. You can see previous push was about 4 days before we saw that bigger pullback. And again, similarly on the volume weighted MACD, still in bearish conditions. Something to consider, but doesn't mean that we're going to break down immediately. All of the other indicators say that we're still looking for more bullish price action, but that ATR resistance does give me a little bit of pause on how aggressive to the bull side I want to be. Moving over to the Russell, we did get a down week here of 1%. Critical zone, you can see that longer term trend line, very important trend line. We've been watching it for a while. We've been in this zone for a while. This is our 4th week in that same zone, and you can see it looks like we're going to get a push based on my opinion. Momentum is bearish, RSI still bearish, but we're holding that trend support. Critical, if it breaks, 198.75 is the next level. And then if that breaks, you got the 200 as your next support down at 195.70. So right here, super important, looking to see if this breaks or not. And if it does break down, this would also be a high, lower high setup, probably going to establish that lower low around that 200 range. So super important zone. I still think there's a chance it holds, but it could be bearish. And then looking at that daily chart just for a moment, you can see that 144 EMA at 200.35. That level needs to hold. Momentum slightly bearish, RSI right at the SMA, so it needs to hold this zone. It's been testing this for several weeks. You can see that same level, 144 EMA, testing the trend line, had a big push, gave it all back. So we'll see how it plays. Like I said, still could hold this zone, but does look a little bit weaker going into this week versus last week. Moving over to the Tasty charts just for a moment. On the weekly, I wanted to show this is still bullish conditions here. ATR trailing stop 183.69. So that's still bullish. You can see we're right in the middle of the range. Haven't really broken to either of these ATR bands at 209.70 and then the low here at 195. So we haven't been able to touch either of those. We've actually been coiling, getting pretty tight here on this consolidation. So see how it plays. Like I said, could break either way. And then looking at that daily chart, this is bearish conditions. ATR resistance is 207.67 right here. Again, still holding that 144 EMA. That's at 198.51 on the Tasty charts. We've actually only tested it one time on this chart, so it does look a little bit better. Momentum bullish. Did see some volume coming through on these bullish pushes. So see how it plays. Still mixed signals on the IWM. Moving over to the Dow. The Dow did have a positive week, 0.66, mostly driven by Apple, and then we can see this next level 398.76. So still in this consolidation, did have a higher low on this previous dip, and you can see this high was slightly higher than the previous, so you would expect a push at least into that zone. Could reject from here, but right now all of the indicators look okay. Momentum swinging to bullish, RSI breaking out, and you can see it here on the daily chart as well, grinding up above that 392.44 level, closed pretty close to the high. Momentum bullish, RSI bullish. It does seem like the Dow is swinging to the upside right towards this previous high, in my opinion. Moving over to the equal weights here on the weekly chart, you can see 2 bearish weeks in a row. We are at that critical zone here. So we did overthrow this trend pretty deep, close to the level 162.57, missed it by just a few pennies, right to these lows here from the 10 and 17 June weeks. Momentum still very bearish, RSI still very bearish. So at this point, you would expect this to break down. Your next low support would be around that 160.31 level. So see if it breaks, heads towards that zone, and if that breaks, then your next area would be all the way down in the the 155.79 area, which would be that 55 EMA. So equal weighted S&Ps looking significantly weaker than the regular S&Ps, which have been driven by that Mag 7 conglomerate. And then stepping down to the daily chart, you can see that critical zone consolidated sideways well below that trend, so not looking good there. And then you got the 144 EMA as another potential support zone, which is 160. And then if that breaks, you got the 200 sitting all the way down at 156.26. Moving over to the ratios here with the SPY, Russell, and NASDAQ SPY, you can see SPY gaining on the Russell massive, 3% higher there. We were hoping for a push down to that 9 EMA at 2.63, didn't quite get there, got a huge push. Headed towards the next level, 2.78. Momentum bullish, RSI bullish. We've talked about this many times. This is very extended for this ratio, and it can absolutely go higher from here, but eventually it will give back all of these gains to some degree, in my opinion, and the Russell will be the outperformer during that time, but that's just not what we're seeing right now. So SPY Russell continuing to go higher after just a 2-week pullback, very slight. And then looking at the NASDAQ SPY, NASDAQ was the outperformer by far, 1.62 gaining on the SPY. And you can see I had to add another trend line here. So wick high back in 17 July of 23. And then we got the push here in January of 24. And now we are headed towards that upper trend line again at 3.68 here for this week. Momentum bullish, RSI bullish. Again, clear divergence. Peak RSI was back here in June of 23. Current RSI 66.23 versus a 76.34, but price action much higher. So see how it plays. Doesn't mean that it can't go higher, at least in the short term. But overall, SPY and NASDAQ are leading markets higher with those mega cap tech stocks driving markets with that really strong concentration in the Mag 7. Moving over to SPY divided by the M2 money supply. This continues to march higher and higher. We're well above this previous trend area. You can see we got above it here in March, pulled back, and now we're well above it again. 27.25 is my next resistance, which is very close to this trend resistance here, 27.17. So momentum bullish, RSI bullish, still clear divergence on the weekly chart, but I think we're probably going to hit that next level, and then we'll see what happens from there. This is again looking very similar to the .com era with this really strong move, very high levels on this ratio. We all know how that turned out. Eventually markets did give it all back, but we'll see how it plays, at least in the short term. Still looks very bullish. Moving over to AMD and Berkshire. I was asked about these stocks, so let's throw them in here. AMD had a very strong week, 5.97%, one of the biggest movers on the week. Momentum swinging to bullish, RSI looks bullish, crossed above the SMA, looks very good. You can see this trend we have here, looks like we're headed to this upper trend around 182.50 or so. It is worth noting this does look like a bear flag though. Move down, bear flag consolidation, push to that upper resistance, and then if this breaks down from that structure, that could indicate a longer term down move here on AMD. Keep in mind that the medium to long term structure is still bullish with a low, higher low setting up, but if this does indicate a bear flag, that would obviously be bearish, so something to consider. Mixed signals there on AMD. And then Berkshire.B, you have this consolidation. Again, medium to long term, very bullish. It's been trending higher for quite a long time. The low was back here in October of 22. And then your most recent peak was March of 24, so it's been trending higher. But look at this consolidation, clearly wedging, waiting for some clear direction. As long as this lower trend is intact, you're good at 401.66 or 450, right in that range. And then if you see a breakout to the upside, which is certainly possible, your trend resistance would be up around 434, which would be right at these wick highs from that 26 February week. And then looking at the MACD just for a second, you can see you did get a step towards bullish, did close on the high, so you could be looking for just a little bit of a push towards those upper resistance levels. Moving over to the Mag 7, huge week here, 7.7% for the overall Mag 7, super aggressive. A lot of that was Tesla, but everything did very well. Trend resistance here up at 290, so just a couple of points higher, about 1.5% higher to that zone. Momentum and RSI super bullish, pretty extended. RSI is already at 78.09. Last time we saw that was here in 10 July of 23, which was a 79.76, and then we did eventually see a bit of a pullback after touching that trend, and you can see it's actually the same trend. So we hit that trend here, just about to touch that trend again, so could be seeing a little bit of a culmination in the Mag 7, but still looks very bullish. Moving over to Apple and Microsoft, obviously these were both super bullish, 7.46% on Apple, super bullish momentum, super bullish RSI, really no levels to work with, no real trends to work with, just straight up price action, closed on the high again, so it looks very bullish. And then looking at Microsoft, we talked about this one a little bit on the Friday session. Upper trend there at 489.40. Both of these look bullish, momentum bullish, RSI bullish, and I would expect them to continue higher. Moving over to Tesla and NVIDIA. Tesla obviously with a massive move, 27.11%, huge volume, huge momentum, headed towards this upper trend. Let's go ahead and extend that out. That trend resistance is up around 267.70. I think we're probably going to get there. This has been a very powerful push, and I wouldn't expect it to stop now. So we'll see how it plays. Everything looks very good on Tesla. And then looking at AMD here just for a moment. Bullish on the week, trend resistance up around 133.78. It did close above 125.17. Momentum fading, RSI still above the SMA, but seems to be rolling over a little bit. Been talking about it for a while. Could be a consolidation, pull back in time. But really, I'd be looking for a test of that 9 EMA down around 114 for at least a shallow pullback. Moving over to Meta and Amazon. Meta had a huge week as well, 7% higher, momentum swinging to bullish, closed on the high, new all-time highs. You would expect this to continue higher. These AI plays have continued to push. And then Amazon, good week there as well, 3.49%, momentum bullish, RSI bullish. Trend resistance for that next week would be up around 212.69 or so. I don't think we'll make all of that in one move, but based on this move, you would expect to get there eventually. Moving over to staples and discretionary. Staples was positive, just about 1%. Still looking for a push above that 77.50 level. Hasn't done it yet, but it really hasn't broken down too much either. VWAP at 76.26 has been holding. And then you got the 21 EMA there at 75.97, also holding. Momentum is bearish, so that's a little bit concerning, but price action is king. If it breaks the level, look for a push to the next one. And then looking at discretionaries, right at the level 189.38, talked about that level for a long time, broke this 185 level, pushed straight to the next one. Amazon and Tesla looking super bullish, and then 198.81 is your next resistance with those trends in that same zone. Moving over to oil and gold, both of these look like an opportunity. Oil could be culminating on this most recent run, but I doubt it. You have a low, higher low setup. Looks like this is going to push to a higher high, at least above that 86 level, which would give you another $3 a barrel on oil. And then gold getting another big push here after this insane rally that we saw from February up until April. Volume did pick up a little bit, momentum stepping to bullish. Think this is going to hit 225 at least, and then if that breaks, we could be off to the races again on gold. Moving over to RIOT and Marathon. RIOT continues to consolidate at this zone. 878 continues to hold. Haven't touched that level in a while, but this downtrend continues to act as resistance. Really struggled to get above it. We're very close to just getting there with time as this continues to move lower. 1 or 2 weeks, we're going to be there as long as this zone holds, and then we could see a push from there. Similar to what we saw here on Marathon, just going sideways in time, getting above the trend, and then we got a bullish week, 1.61%. This could be an initial test, and this weekly chart actually looks a lot better than it did on the daily chart, so could see a swing higher. Trend resistance up around 25.50. And honestly, both of these have held in there quite well despite these shorter term downtrends. Moving over to breadth, both of these were quite weak. Gap down and fell. Still held the levels though, 36.60 and the 40 level here on the 20 and 50 respectively. Momentum bearish, so that's a little bit concerning. We've been talking about breadth fading despite markets going higher. I think that's part of why we're seeing the Russell fall. But like we saw, Mag 7, Mega Cap Tech continuing to look very strong. And that's really what's pushing markets, despite the fact that breadth is looking quite weak. Moving over to 20-day breadth, you can see we did get another bearish week here, and this continues to show lower and lower highs on each of these. You would expect a lower low here, push down to that 200, which is down around that 61.37 area. Momentum didn't step down. It was actually completely flat. Really should have stepped down. It looks like a little bit bigger bar there, so see how this plays. I think we're going to see a continuation down to the 200. This looks like a slow fade, something similar to what we saw here, where we actually peaked in April. Breadth continued to fade aggressively, and we didn't really see markets roll over until about mid-December, and then once they did, it was very aggressive to the downside, and it was a deep cut. So we'll see how it plays. Seems like we're starting to see the initial stages of that same thesis. The only thing I would mention that's different is that we did get to a very high level there in April, up around that 96 area, and that's not something that we saw on this most recent run. So something to consider, but it is rolling over very slowly, and markets are also going higher while it is doing so. Moving over to the dollar, very weak candle, 0.92. You can see we did close below this trend, something we haven't seen in a while, so We'll see how that plays. If we get the continuation lower, that could be bullish for markets. That was on the back of the unemployment data that we saw Friday, which was quite weak. Next level, 104.4. Below that, you got the 55 EMA sitting down there at 104.1. So see how it plays. Momentum RSI, very bearish. It does look like a lower high setup. We didn't get towards that upper trend like I thought that we might. Moving over to the 2-year and the 10-year yield, you can see the 2-year cratering down to that 4.6 area. We haven't seen that since back here in March. Probably headed to 4.5. We'll see how that plays. Broke this structure well below these previous lows. Momentum very bearish. RSI bearish. Again, catalyst of that unemployment data pushing down yields. Markets expecting the Fed to cut with the weakening jobs market and the higher unemployment rate. Looking at the 10-year though, 55 EMA hanging in there at 4.28. Still haven't gotten into normalized conditions. It's been a very, very long inverted yield curve, but it does seem like we're headed in that direction now. 2-year selling off aggressively, 10-year still holding in the same zone that we've been in for the past couple of weeks. Moving over to bonds, J&K had a good week, 0.34 to the upside, headed towards 94.82. I'm definitely bullish on bonds, especially with what we're seeing on yields and the unemployment data. TLT, we've been talking about this uptrend. Still a concern that this could be a bear flag. You have the push down, bear flag, looking for a potential break there. But we did push back into the range. Want to see it get above 92.82 if it can, potentially a push towards this upper trend. Let's go ahead and extend that out a little bit. That would be up around that 95.60 area. Next level would be 96.50. So we'll see how it plays. I do think we'll get a continuation week on bonds, which should give equities a little bit of room to the upside as well. Moving over to the VIX, you can see we've been here for many weeks in a row at this point, going on that 9th week. So 4 weeks here. Another 4 weeks. 9th week in the same range is pretty unusual. You can see these previous consolidations. 1, 2, 3, 4, 5, 6, 7, 8, 9. That was the start. And then we got a spike. Similarly here, a couple of weeks, got a spike. So see how it plays. We've been here for a while at this depressed level. And don't forget we have CPI in the start of earnings season. So probably a natural rise, at least a little bit in volatility as we go into that time period. Moving over to my accounts, you can see I was just a hair short of that $140,000 mark. Obviously, it was a very bullish week, so I made money this week. And then looking at my positions here, IWM sold a 201 covered call for 71 cents. Looking to make a little bit of money on that going into the Monday session. And then looking at the Qs, still have my covered call at 488. And then I have a put for the Monday session at 493 for a little bit of money. And then I have a longer dated call here at 500 for 236. I'm a little bit concerned that we are extended. I want to keep those calls on to at least give myself some protection. So I am still bullish on my lean as everything still looks bullish, but we are getting extended and I want to play at least a little bit of defense. Let me know down in the comment section what you think of another Trump presidency. Could it be bullish for markets, or will all of the tariffs and tax implications lead to a bearish 4 years? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.